What does investment-led mean? Focus on where we have an embedded expertise, and that's all the things we do inside of Brookfield. But what we've not touched on is it also has an implication to leverage. If you're focused on investing where you have an information advantage and you have an advantage from an operating perspective and you can generate higher returns, you don't need to use leverage to generate your ROEs. And therefore, dial your leverage down. Most traditional insurance companies operate at mid-teens leverage. Some of them operate at 10 to 12. Some operate as high as 20. We run our business at 6 to 8 times, 7, 8 times leverage. And that number will decrease over time as we build up capital inside the business. So we don't need to use leverage to create returns. The returns come from the investment side. It also informs how we think of new products on the insurance side. Really, we're focused on low-risk, predictable liabilities. It's why we sold off many of the non-core lines that were in the business in the first place. And to put it in terms of just how we think about it from a returns perspective, you can see here what I was getting at in terms of the mix of privates versus liquids, the level of spread you can generate, and the leverage. And all of that drives to maybe at certain times even a comparable return to other insurance companies, but with much less leverage. We view that as being a much higher quality of earnings stream coming out of our business because lower leverage, same returns, more durable cash flows, more predictable liabilities. And this has allowed us to actually deliver what we've said we would deliver 5 years ago. All of our insurance businesses operate with an A ratings. 2 of our businesses got ratings upgrades over the last 3 years as we've been operating them and building up capital. We will generate over $2 billion of distributable earnings next year from 0 5 years ago. We have maintained a greater than 15% ROE since inception. This is an important point because what it means is every decision we make isn't just about growth. We're not just trying to grow AUM. We're making decisions to prioritize profitability over growth. And when you do that, there's times where you will scale back, and there's times we have scaled back. We could have pushed the envelope and actually distributed more or written more annuities, but we are very careful when we see rate movement in the market. We've been able to do this without taking any third-party capital in. This is important because our capital at Brookfield is permanent. It's long-term in nature, obviously, and therefore it's fully aligned with policyholders who sometimes own products that will be with us for the next 20 years. If we buy a pension out of the pension markets today, we could be paying somebody for the next 25 years. Having permanent capital backing them ensures full alignment, ensures we make decisions with policyholders in mind. And that is a really important long-term reputational matter for us as the business grows and scales. And then lastly, we have been very focused on making sure that we move beyond the US and grow in markets where this phenomenon of aging populations will offer further scale opportunities.